Hey guys, it's Derek for More Plates, More Dates.
Hopefully, at least a few of you got that reference. Basically, role playing is Alex Hermosi today with the tank top on. I'm not taking it off though because this room is sweltering. And actually, you know what? Who's role playing is who really? How much does this guy weigh? All right, Alex, what do you actually weigh in at? 112 kg? So what? That's like 244 pounds, right? Should be 2.204, 2.205. Okay, 246 pounds. Okay, I'm 265 pounds, Alex. Who's role playing as who? Huh? 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 Okay, wait a second. I definitely need to be quiet. Look how jacked this guy is. Dude, whoa. I got a lot of weight to lose before I look that tote. Okay, enough with the meathead debauchery side quests. We now got to talk about markets. Let's dive right in. So we've had a great week of trading. The last 2 weeks have actually been pretty fantastic. A lot of that is by taking this market week over week. If you remember, on a larger time frame, we're kind of looking for the S&P to either develop a fifth wave coming up to the upside into the end of the year, or we're looking for a C wave chop to the downside. So I have been just playing very short term, been doing more day trading even as of recent, especially when it comes to Tesla, which we're going to talk about in a moment. But when looking at the S&P, I want to watch this 242 level right here. On breaks here, we've seen big impulse moves to the downside, or we've seen big buying to the upside. I guess you could technically say it's this 43 range potentially. You could probably fight over which one of these is going to be a bigger factor. We've seen a double bottom here develop at the 443 coming into the close on the Friday as well. We can see that on the TTM squeeze and on the RSI, we've seen a bounce out of the hole here. However, it is important to remember that RSI is kind of like a momentum indicator, right? So when we see a big low like this down here, it usually means we're going to chop lower on the market. You might not see the RSI hit such a low number, but it does typically mean that the sentiment is still really bearish, and you'll likely see lower prints on the way as well. The RSI doesn't have to hit this level of oversold though. Again, it could still melt down further. So I would use as an indicator to say that we'll probably break down from here, and I would be probably looking to take a short-term trade on a break of 442 down to 440, probably get aggressive and then look to see if that breaks, and then once again start looking for maybe a visit down to 430 on the way down. I don't think it'll be a straight shot. I mean, it depends on what kind of data we get and such this week, but I think the best way to play this market right now, what has been working, is to keep things very short term, play it week over week. And I will continue to do so. And now let's talk about Tesla. I like paying Tesla because it allows me to be bullish even when the greater market is bearish. Tesla doesn't have a tight correlation with the S&P. And so, it's looking very bullish right now. Potential 5-wave pattern here. We have a perfect touch at the 0.382. Very clean. Love that. Looks like the 5th wave. It actually places us near all-time highs for the stock. If you go to the 0.618, and I'm out, if I go out to a weekly, you can better see we're like near all-time highs at that point. I don't know if that's really the greatest potential, which is why I also have this Fibonacci's levels set from the high to the low on a multi-year time frame. And this has me looking at the 294 as a potential double top, basically, for the 5th wave, kind of a truncated wave like NVIDIA. Potentially, if you break through that and look at the psychological level of 300, and then see where we go from there. Could be balls to the wall. Maybe self-driving becomes a thing. You could probably argue that it's already priced in the stock, but hey, we'll wait and see. The hype might carry it through. It wouldn't be the first time we've seen that. And of course, though, I'm going to be playing this in the shorter time like I am with other stocks. So I've got some levels set up here. Looking at this wave development, we have to touch on the 4th wave, coming to a high here before the retracement, set up the Fibonacci's from there. I'll be looking at a breakthrough of the top here, which we see a nice touch there at the 297, potentially breaking through there. Might give you an opportunity for a short-term play to the 285, and that'll be another trade I'm looking for there as well on Tesla. And now let's talk about NVIDIA. TradingView has decided to be on my bad side and remove all my drawings, so I'm having it auto-generate Elliott Wave thesis. I think we talked about this last week, actually, how it was really close to my drawings. And even when I look at this right now, it seems pretty accurate, which is not the typical outcome for using the auto-generated Elliott waves, because remember, it's not really a science, it's an art, and machines, even AIs, are not very good at art, unless it's like a literal NFT picture. But we're looking at these levels, and we can even see it's trying to say an A wave is completed just by generating the Fibonacci levels from the fifth wave to the bottom of the fourth wave, which is typically not how that works at all. If this decides to bounce early into next week, you could probably use those for a short-term move, but then I wouldn't even say that a wave has fully completed, unless it's doing subwaves. That might be a B, C, and then for the completion of the A wave is what it's trying to say. Maybe that might actually be true, but the thing I want to be careful of is if you look at the RSI on the 15-minute chart, we can see that we've again hit this very exaggerated RSI to the downside. I don't think we'll hit that exaggerated level again, but even as you've seen in the recent history, like this stock, when it hits these low RSIs, you can basically use that as a momentum indicator and insinuate that there'll likely be more lows coming in the future. We've also seen a major break on the 440, which indicates to me that, hey, 420 is probably what we're looking for next. On this stock, looking at the larger Fibonacci targets that we're seeing at the 0.618, we're even all the way down to, what is that, 353? Is it gonna happen for sure? I would say no. Again, this is another stock where I want to play it week over week. You get one headline of AI, and you're gonna pray you're not short if there's ChatGPT 5 dropping next month. So again, I want to be quick in and out right now in this market environment because I'm really uncertain on what the greater trend is insinuating. And if you remember in the Discord, you also saw me taking some profits when it comes to different energy stocks as well, which are still trading to all-time highs, still keeping some exposure there, but making sure to take some profits. I wanted to build some cash. I also did buy the ARM IPO as well when it came out, about $55 average. I was really quick to get into there. It was a quick 20% returns. I saw that some members of the Discord decided to take those near the highs. Well done on that. I am holding this for the long term. I really like the stock. It will have options available on Monday. Probably be looking to make some plays there. And I also have more exact plays set up on the video as well. But of course, if you're a Discord member, you can see all that information, everything that's going on, my thesis there. And one of the things that we also need to talk about, and I thought this was really interesting. I shared this in the Discord. This is a research paper that basically tries to suggest that you can beat passive investing if you have a close eye on the price action of utility companies and use it as an indicator of risk-off environments, and control your equity exposure due to those signals that you get from the utilities market. And so the big argument here would be that, hey, all this buying you're seeing in utilities and energy are actually a symptom of people going risk off and not wanting exposure to growth stocks and high risk stocks. And so they're looking to de-risk by safer investments for fear of the recession. Now, I don't think you've gotten enough confirmation to say that that is probably the most likely thesis right now. Because like I said before, I'm not positive on the greater market trend right now. I'm not sure how the end of this year is going to play out. And so I'm just playing this week over week, but I thought this was a really good read. I thought this was well researched. There was a lot of data. They went through multiple market cycles when they put this together. You can also follow the writer of this article, who's a CFA, Michael Gade, on Twitter or X as well. He puts out some interesting content. I think he's more of a perma bear, which some of you will love, and some of you will hate. It's just all based on your personality, how you like to trade, how you like to invest, what best suits you. So I thought that was interesting, though. I just wanted to share it. I do also want to say that newest podcast is out with Simon Erickson. And if you have any interest in AI or quantum computing or space technologies, I highly suggest you check out this podcast. He's a very forward-looking guy, early to Bitcoin, early to biotech, early to AI. I mean, he's all over it, talking to the leading scientists in the space at all times. So it was really great to hear some perspectives from him. He really helped build my framework for my understanding of quantum and flush that out. It's completely changed my perspective on the quantum computing companies as well. And so check that out. Now I might do a short write-up in the Discord as well. If you want that and you're a member, comment that down below. Maybe I'll write some reflections or such on that. Now let's talk about the Discord and social media in general. My big goal with a lot of this is to probably have some sort of crossover between fitness, politics, and finance, and kind of find the interconnection with all those to create content encompassing all of that. And I'd like to have a few employees and a few other people that I network with, like I have in the Discord. There are multiple moderators and stuff that all work and help out for free because they love this and they love what I'm doing, which I'm super appreciative of. But I can't justify getting an editor right now and paying them out of pocket if what I'm having them do isn't making me money on the side. I'm not a big, I'm not an Alex Hormozzi where I have, $200 million and just can't, I just wouldn't have to care about paying someone out of pocket $70,000-$80,000 to edit the videos. If I get an editor in the future, the videos become monetized. So I would give them like 50% of the revenue that's made from the YouTube if they did all the editing, so that they're driven to also create great content for you. And it would also allow me probably to create 4 times the amount of content. I don't think a lot of people understand how long it takes to edit these videos, to generate the thumbnails, to put all that together, or the other expenses that are involved in that. I use AI to do that. That's a subscription. I have to use TradingView and different research market materials. Those are subscriptions. And then I'm sharing as much of that information as I can, taking the time to type that out, taking the time to answer people's questions, and a Discord that is completely free and generates no revenue for me. So I also get a lot of feedback from people that, oh, the Discord's free. It must not be that much value, because why would you do it for free? And that is extremely frustrating because my goal there is just hardcore growth. But the thing is that we're not really getting hardcore growth. Now, the Discord does outpace YouTube and multiple other social medias. YouTube has 418 subscribers. The Discord has over 700 now at this point. But it's not correlating to me being able to hit these benchmarks and these goals and the revenue I'd like to continue to grow the brand. So I'm going to be looking at closing out different sections of the Discord to help generate more capital so that I can provide more content, more services in the Discord and on YouTube. I need to free up more time so that I can do a lot of these things better than I'm doing right now. The only way I can do that is if I get aggressive and start demanding from the free market what I think my value is. And at the same time, there probably is things that I could do differently to make my growth more aggressive, such as sharing actual dollar amounts. And I talk about this a lot to different Discord members that have suggested it. I do not want my community to be filled with people who are thinking they're going to make, $20,000 overnight by options trading. I think that gives bad signals. I think it will attract not the type of community members that I'm trying to build here. I want educated investors who are looking to trade on the side, or traders who have a mature understanding of trading and want longevity in this space. I'm not looking to develop a community that thinks that this is easy and free money, or this is going to be a quick turnaround. I've also seen lots of people who go for that marketing employee who do get that rapid growth and then just immediately drop off. That is not my goal here. My goal is a steady, slow growth of a community that has longevity. And so I will never change that. I will not go for more viral tactics, because that is not the community I'm looking to build, and that is counterintuitive to the goals that I want. I'm fine with the slow growth. I've been fine for 2.5 years that I've been doing this. It has not been a huge worry to me. It has made this slower and more of a grind, but I embrace grinds. I'm fine with that. Trading is a grind. The gym is a grind. My lifestyle has been a grind. That is completely fine with me. I have a mindset that thinks in 10-year spans. It doesn't think in 1 month spans. And so that's just where our mindset is right now. Just wanted to take a moment at the end of this weekly report and talk about it. You might disagree with me. You might think my justifications are wrong. That's completely fine. I am definitely open to hearing those. It's always been an open door policy, and it will always be that way as well. So if you want to leave a comment down below, if you want to come talk to me in the Discord, I'm here for it. I do also want to add that I have gotten some offers for sponsorship. Some people have tried to throw money at me. Usually it's some crypto company, some NFT project. I am not going to advertise garbage to my community. You guys come first. I will not take a bag to do that. I'm completely unmotivated by that. I don't want to do anything that will damage my brand in the long term. Remember, I'm not thinking about how can I make the most money in the next month? I'm thinking about how can I grow the best community over the span of 10 years. That is what my focus is going to be. It will not change from that. So, if you're worried at all based on, me sounding like I'm trying to chase a quick bag or make as much money as possible off the Discord, that's not my goal. My end goal is to do as much help as possible. And I need some of these things to actually make some money to do it. So, or to at least justify it. So, I hope you get it. I hope we're all on the same page. Leave comments if we're not. And I will see you next week on another weekly report or talk to you in the Discord.